All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on Wednesday, January 11th, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Okay, great. So everything looking good. Somebody let me know in the chat. Everything is coming through loud and clearly. Let's go ahead and start with crypto, just because we are seeing quite a bit of volatility at the moment. So here on the daily, doesn't look like much is going on here from the longer time frames. Obviously we are looking for that backtest of the 200 exponential and simple. So when we confirm the 821 bull cross here, we were long on Bitcoin. If we go down to our shorter time frames, we can see here we have confirmed above the 200 exponential and simple. So very clearly now we have entered into a 4-hour bull market. Now we do need to be careful as we are at extremely high elevated levels. But if we turn on let's go back to the daily, and then we'll turn on our drawing tools, and we're going to pay attention to some key levels that we are at currently. So let me just go ahead and I'm going to extend out this fib right here in yellow. And that's the one we're going to be focusing on. So don't mind. Matter of fact, we can pull this one off here real quick. All right. So the fib we're looking at right now is the yellow fib. And that's from our previous peak up here at 21,500 down to our macro low right here at like 15,500. And we have essentially moved up and hit the first target, which is the 0.5. So we came all the way down, hit the 0, put in a top, a bottom, and then we initially had a push back up to the 0.5, and then we came back down. We found support around the 236 in orange right here. So we put in a higher low on the macro, and then we started to move back up here. And now we're threatening that same 0.5 that we moved up to before. So if we're at the 0.5 now, obviously we know the next target, if we already hit the 0.5, is the next highest fib level. So that would be the 618 or as high as the 786, which lines up with our daily 200 exponential, slightly higher, and 200 simple is slightly lower. So essentially what we're looking for is we just popped up. We close here at the 382. Let me go back down to the short time frames, and we can see in real time what's going on here. So we moved up here and closed at the 382 almost exactly. And then right afterwards, essentially at that point in time, there's no doubt in anyone's mind. We put in a higher low. We're going back up to retest the previous high. So that's exactly what we did. We shot straight up to the 0.5. And now that we're at the 0.5, the next target to the upside will be our next fib, the 618, and then eventually, potentially top out at a lower high than our previous high. Now, if we take out that previous high up here, we could see continuation of the upside. We'll start paying attention to our other macro levels. But in the meantime, we need to clear this 0.5. So you'd imagine that if this was our previous top, that there would be quite a bit of resistance here at that same level again. Now, there's going to be some selling, obviously, that comes in, but I do expect that we'll be able to chew through that. Those previous people that got stuck buying the breakout here should be able to get through that in a reasonable amount of time and then push up to the 618 or 786. It is worth paying attention to that we do have some macro factors with our inflation print and everything coming out tomorrow. We don't necessarily even know how that's going to affect the market because it's realistically not what happens. It's what happens in relation to expectations. So obviously inflation has been coming down. People are expecting it to continue coming down. So if it comes down, but not enough, that could be bad. If it doesn't come down at all, that could be bad. Again, it's just all relative to what people are expecting. And so at this point in time, it looks like what we have been planning on, expecting on, trading on is happening. So we have the initial 1 up here, which is 5 waves to the upside. We have a 2 higher low right here, which is somewhere in between the 618 and 786 pullback. And then from there, we're moving up to potentially put in a higher high, which would then be our 1. Our 2 is our correction of the 1, the 3, and then the potential correction of the 3 would be our 4. And we know the 4 cannot come down lower than the top of the 1. So what we're looking for is continuation from this level and then see where it tops out. And then after that, we're seeing where it bottoms out. So there's still quite a bit of development to take place here. But for now, everything looks exactly like expected. It's playing out perfectly. And if you were trading this on shorter time frames, all you have to do is just continue to trade the 821 swap as soon as we see the bull cross take place. And then again, we get more and more bullish as we start to close above the 200s, as the 200s flip bullish. And then again, if we just zoom out to our daily, now it looks like we're on track to come up here and retest these levels. So obviously the initial push up here got rejected on these few little wicks right here. So we're trying to make our way through that level now. Now, obviously, the more times we touch an area, the more resistance it's going to act as. If we do get through that, we'll look at some of these other clusters of resistance around 19,000. Will probably be a touch of the 200 simple. And again, that's going to be our first time touching the 200 exponential and simple since about March of 2022. So not quite a year, but it has been some time. And we know as long as we're trading below the 200s, essentially we're trading below fair value. And then if we do, if and when we do push up to the 200 exponential or simple, all we're doing is just returning to fair value over the last 200 days. Doesn't mean we're immediately going to be bullish or bearish or anything like that. We know obviously as long as we're in a bear market, you would expect people to sell the retest of the 200s. So not much has changed here. Obviously had a nice couple percent to the upside. All of the trade setups that we had discussed and participated in are playing out very nicely. Obviously it's not always going to be the case. So Ethereum next, looking good. Back tested the 200 simple. Seems likely it's going to the 200 exponential, which is that 1500 target. And then I don't think we had the actual trade setup on Ethereum. Total market cap is basically doing the same thing as Bitcoin. Now, what we're going to pay attention to right now on Bitcoin and also this total market cap is essentially, is this going to amount to a W double bottom or something like that? If we do break through this level, we would expect to hit the measure move. And if we just take the measure move from our low support somewhere around there, and we just say, okay, if we break out past this level, all it does is just take us back up to 200 exponential and 200 simple. So about $961 billion. So still not quite above 1 trillion, but the measure move would at least take us up to the 200s. Again, this chart looks almost exactly like the Bitcoin chart. So Bitcoin dominance was really the key here. It basically spelled out exactly what was going to take place in real time. So we see that Bitcoin dominance was starting to gain back and was about to get that bull cross. And at that point in time, that's when we saw this pressure come in. And essentially what it was, people just buying more altcoins or selling Bitcoin to buy altcoins, or, moving out of stable coins into altcoins, or moving out of Bitcoin into stable coins. Any of those things helped to tell the story. And essentially at this point in time, the story is Bitcoin started to look okay. People were getting worried, didn't want alts anymore. And then suddenly we have this reactionary rally, whatever. So this was essentially predicting, in my opinion, what took place here. And obviously in real time, we see it playing out. Same thing with Bitcoin dominance minus stable coins. It was looking much more bullish. And then what happened? Broke straight back down below that resistance, support rather. So Solana obviously is complete trash, but we did lay out a potential bull case scenario trade setup here. And all of these trade setups have gone in our favor. And when we were laying them out last week, it sounded crazy. And I was even saying, look, I know everybody is really negative right now and whatever, but you have to trust the technicals, and you do. Solana moved up 25% since then and is on target to that 116% retrace, the back test of resistance as expected, as predicted, etc. So Link is next. So we basically have the 821 cross. We're looking for a retest of the 200 simple or 200 exponential, somewhere around that $7 range. Polkadot still lagging behind here, but we see this descending channel. We're essentially outside the top of the channel. It has failed a couple times previously. And also the measure move on this channel is much, much higher than our initial targets. Seems more likely than not, we're going to come up here to 200 simple or 200 exponential, somewhere around like $6.50 to $7.30. XRP, obviously complete trash, but just as discussed, essentially as long as you didn't get wicked out here, you could have took this trade setup and just going by closes, you would have been fine. If you didn't take the trade setup, if you waited, essentially you could have taken it right here as well and immediately moved in our favor. So 18% target up here to 200 exponential and simple. Big laggard XRP is, so basically trash. I wouldn't even touch it. Cardano. So this was one of the first and biggest to move here. Partially just because it's gone like straight down for the last like year plus. And obviously, let's be real, Cardano is complete trash. But from when the 821 took place until now, it's moved like 22%. So it has outperformed the majority of the crypto market. Now, the real question is, was this a capitulation sell-off right here? And then this is essentially just returning back to fair value. And then that's like the bottom end. This was a big short squeeze. I'm sorry, long squeeze, etc. It's possible. In my opinion, we came down to a key level and touched it like literally exactly perfectly to the wick. So it seems more likely than not we would bounce that 0.5. The real question is going to be what happens here at resistance. Obviously, we moved straight up to it and it was immediately sold off. But we have the orange resistance here. We have the red resistance here and basically a cluster. If we can get through those with Cardano, and by we, I mean whoever it is that owns this, because it's obviously not me, could potentially move up to like 40 cents. Really, the target would be like 43 cents if this thing is going to act, act a fool, start getting bullish. I'm pretty sure anybody that has bought Cardano, like for anything other than a scalp though, has already lost all their money, either on Cardano or some other stupid investment. Because obviously, well, you get it. You get it. Okay, so Cardano looking pretty trashy. 33% potential though, if it does come back up here to this level, which honestly, if we do get continuation, seems likely. So BNB is next. Once again, complete trash crypto. I'm definitely not a fan of it, but once again, we laid out this in advance. And if you would have taken, I laid out exactly why I thought this was going to break out and why it looked like it could be one of the top performers. It's already moved quite a bit from the entry level off the 236, back testing the 382, back testing both the 200s, back testing the heartline. So it seems very likely it's head up to 300. If it makes it to 300, then we can start looking at the 0.5 up here at 350 or the potential long-term target. But right now, I would say there's quite a bit of cluster of resistance at this level. So I wouldn't expect anything that's already moves quite a bit and is at resistance. I wouldn't get too excited over. But we could see quite a bit of volatility with our inflation print coming out tomorrow. And then Matic is next. This is one of the ones that I personally participated in. So obviously we got the entry down here at 80 cents. It's up here at like 89 so far. So decent little move. Expecting something as high as like 53%. The next real target would be that 0.5 at about 96 cents. I did go ahead and take a little bit off the table on some of these crypto positions. I sold into the 200 exponential on Matic for now. And I also actually traded it in and out of Bitcoin a couple times on that most recent push up. Went ahead and took some profits as well. So I'm still bullish on everything. Like short to medium term, it definitely looks like there could still be some further upside on these cryptos and on the stocks we're about to talk about as well. But definitely want to lock in some gains here as these big volatile moves like to the upside. Here's the thing, like probability wise, they're just not usually sustainable. So here we got the 821. We had a big push up and then gave away the whole thing. And then we had another push up, gave away half of it. And then we had another push up. And then we took out like the low from the cross. And then here it was a failure. Here it was a failure. Here it was a failure. And then new lows. So I don't want to get overly greedy trying to like maximize little bits of scalps. Like to tell you the truth, if I can get a position and be in that position for only a couple of days and lock in 5, 10, 20, +%, I'm going to lock it in. And then honestly, as the chart starts to develop more, build some actual like support, start to take out some key resistance levels, I'm much more likely then to take an actual like sustained position without like, losing sleep over it or, worrying that it's going to reverse on me and I'm going to give back all my gains, break even, or take the out, which obviously, our top priority is, locking in actual gains, especially when you're in a bear market, which all of crypto 100% still is. All right, so moving over to Dow Jones. So we talked about this. As long as we stayed above the 200s, the longer we're up here, the more bullish it's going to look. We were all the way down in the bearish control zone, hard buy signal on the bull cross, and we're pushing up here. The key will be trying to take out this previous high. It's going to be difficult getting above that level, but the truth is the Dow Jones actually looks the most bullish of any of our major indices. Started in a weird spot there. So TNX looking like it's rolling back over. That's exactly what we want to see. It maxed out at that red resistance, broke back down, 821 bear cross, down here threatening the lows. It hasn't taken out the low yet, but you guys know obviously the target for TNX is $3.25%. And essentially this lines up with what we're expecting. We have about 3 weeks left until the next Fed meeting. We have an inflation print tomorrow. So you have to assume always that the market is irrationally bullish, because that's just how the market is. So in my opinion, the bond market, and the stock market, both irrationally bullish right now. And part of that being sustainable, or part of that being, even realistic, is essentially weakness in TNX. And so we know that the weakness in TNX could sustain up to like 3 weeks, essentially, until the next Fed funds hike, which we're expecting to be either 50 or 25. At this point in time, it's still up in the air. Not even the Fed knows, because we don't know what the inflation prints are going to be. So we'll find out tomorrow, the first one that's going to make a big difference, and then we can kind of go from there. Obviously, if the inflation suddenly comes in hot again, which I don't think it's going to, I think it's going to come in on the softer side, that's going to be more bullish for the market. If inflation comes in hot, that's not necessarily good. And the idea behind that is essentially, if we see inflation continue to come down while we see high levels of employment, that is essentially, quote unquote, the soft landing. So, it basically means, hey, hate the Fed as much as you want, but, they're doing a good job. Now, granted, they obviously have done a horrible job, but, right now at this exact moment, like, they're kind of doing okay, or at least not as bad as you would think. It's definitely not a crash landing so far, but also remember, timing is very important. We're still very, very early into this economic cycle, depending on how you're looking at it. It's not crazy to think that the downturn could actually last longer than people are predicting, and the stock market can continue to go up, or at least like fluctuate. So TNX seems likely that it's going to come down a little lower, and then around that same time, right around the end of January, beginning of February, then we're likely to see some kind of relief rally, a push back up, as the Fed actually jacks rates another 25 or 50%. So US oil right here, we have broke down from key support. We back tested that support as resistance, came down and put in a higher low. So we have to look out here, as there's potential that oil is at least putting in a short-term bottom. And by a short-term bottom, I mean it's coming back up to retest the 200 exponential and simple. And then if and when it does get up to those levels, then it can decide, hey, is this going to be the macro bottom and we continue higher? Or is this just going to be the back test of the 200 simple, we get rejected and then go lower? And obviously there's quite a bit of resistance at that same level, which if we just shot up here all of a sudden to like 93, we would hit that exact same level where there's a bunch of horizontal resistance already, would line up with the 200 simple as well. So US oil, honestly, I could see this one going either way. There's definitely some macro headwinds for oil if the economy slows down, if we do see like global recession, but there's also some tailwinds for oil as well. I mean, not to get political or anything like that. You guys know obviously how I feel about politicians. They're all complete trash, garbage, corrupt pieces of shit. That being said, the strategic petroleum reserve is about halfway depleted and at record lows. Now, in hindsight, of course, people are going to say, oh, they're using it as a political tool, it's bad, da da da. Sure, okay. But honestly, though, if we're not going to use, and this is completely subjective, if we're going to have a land war in Europe and an energy crisis and like this type of situation that's going on right now, all the crazy stuff on the macro, if all that's going on and we're not going to use the strategic petroleum reserves, like what do we have them for? If a land war in Europe and an energy crisis isn't enough for the US to deplete its strategic petroleum reserves to help out its allies that literally have war on their doorstep, like it or not, I mean, what are we using it for? In my opinion, without being political, I think it's a great use of the strategic petroleum reserve. Now, granted, should the US government be manipulating oil prices globally, da da da? No, of course not. No one should be doing it. But if OPEC's going to do it, why can't the US do it too? And especially if it's to help our allies in Europe while there's a land war. So that's enough of that. What's going to happen though? I mean, it could go either way, honestly. I mean, depending on, it's not like the US government's just going to go in the open market and just start buying up like, futures contracts or something like that. No, they're going to lock in a rate with certain suppliers. And whatever they lock that in at, essentially will temporarily put as some kind of floor under oil. So it's important to pay attention to that for now. But the truth is, if China opens up and everything's just back to normal, there's going to be a massive demand for more energy, more oil. If, the war suddenly ends There's going to be more supply, less demand. I mean, there's a lot of factors that could happen here that could really change the direction of this. But the truth is, much like the dollar, this is obviously, I don't want to say it's an artificial push down here, but I mean, we know the US government is using the SPR to manipulate the price of oil. But what is manipulation really? Just somebody with the bigger stack than you selling or buying? I don't know. I don't love that term. But obviously there's some unnatural forces at work here on oil. So it's not crazy to think that this thing could pop up, be at new all-time highs, or could capitulate down to our $60-something target, as we've been predicting since way back here prior to the peak. So VIX is basically doing nothing, hanging out at the lows. We got that initial pop up here, looking for another pop substantially higher. This is obviously building up momentum now, going nowhere. There's a lot of weird forces in action here. I think the biggest thing that people need to realize, and we had talked about this going into the end of the year, is there was a lot of tax loss selling that took place at the end of the year. A lot. Okay. Most people's portfolios or portfolio managers or, whoever don't often lose on bonds or, major indices or in general. They might underperform the market, but they're not going to actually lose money. Last year, we saw a lot of actual funds, people, whatever, stocks, indices, down 20%, 60%, 80%. So the amount of tax loss selling that you're going to see take place at the end of the year is probably like nothing we've ever seen before. So it's not crazy to think that regardless of what's going to happen this year, whether we go to new all-time highs on every asset in existence or we crater and go down another 30%, regardless of what happens, regardless of what you believe or you think or your feelings, regardless of all that, it is a absolute fact that there is money that left the market fully intending to buy back in, 30 days later after locking in those losses. So it is not crazy to think that tax loss selling could have started in November all through December. So we could see, a pretty decent amount of buying pressure coming in all through, January, even into February, regardless of the final direction of the market. Because you have to look at it as someone who says, hey, I'm down a bunch on this. I'll just sell it, lock in the loss, and then I'll just rebuy it. So it's going to create some artificial selling pressure temporarily, in addition to all the selling pressure that was already going on. And then it's going to create some artificial buying pressure as that same person, net positive or negative, nothing has to change. I can go from owning 1,000 shares of Tesla, selling 1,000 shares of Tesla, locking in my loss, or, whatever the situation is, ARK stock, whatever you lost on, and then just rebuying that exact same position, but after taking the L, for tax purposes. So the same equal thrust that we saw to the downside, we could get to the upside, and we may even see some kind of continuation from just other money that's been sitting on the sidelines. So I'm not necessarily expecting the VIX to be a great indicator. What I'm expecting is when and if we see a relief rally in the DXY, in the TNX, in the VIX, I'm expecting that to be equally met by a violent downturn in all the risk on assets. But that doesn't have to be anytime soon. In my opinion, we could literally see this continued rally and buying going into honestly, even the whole first quarter. And listen, there's two main narratives going on right now. Well, there's a bunch of them, but the two main narratives going on right now are from everyone. Listen to anyone going into this year. And what were they all saying? The first 6 months of 2023 is going to be bad, but the year end is going to be good. So it's going to be bad at first, and then we'll get through this recession, and then everything will be good. I said the exact opposite. Not just because it's the exact opposite, but here we are. I called for a early rally into the year based off tax loss selling and all the other stuff we talked about, and then weakness going into the end of the year as actually people realize, oh, wait, maybe things actually aren't that great. Maybe we are actually going to go into a recession. Maybe, the consumer's not in that great a shape, et cetera, et cetera. So keep in mind, once again, we're on the complete opposite side of the market, and we're doing so. And, all of our trades have basically exploded to the upside. All right, so we just looked at the Dow. Let's look at the S&P. So S&P is banging its head on resistance. Now this has a cluster of resistance here. We have the 236, we have the descending red resistance, we have the 200 exponential and simple, all right here at this level, 399. That's what we've been talking about. We need to clear 400. If we do, the measure move is back to previous all-time highs. So that's 20-something% to the upside. If we're going to roll over, this is where it happens. If we're going to break out, I honestly think if we break through this level and start seeing any kind of sustained price action, take out this previous high right here, even consolidate just above like 410 or so. I honestly think we're going back to all-time highs, guys. I know it sounds crazy to people, but it's not every asset back at all-time highs, but it's enough. Triple Qs, NASDAQ banging the head on resistance here. Now this isn't a clean resistance. It kind of broke out here already. So you could argue that it should be something a little closer to this. Actually, that honestly looks a little better. If we went by these closes here, and then honestly, that looks a little better. I do actually like that. That was like the gap up, breakout, and then break down. So yeah, that's probably how it should be. But as long as we're trading inside of this little pattern right here, I expect this to act as resistance. We see that 284 level, again, is the same as our descending resistance line. Slightly above that, 295 is the 200 exponential and simple. And then if we just extend out this macro fib right here a little bit, we can see the 382 is like slightly above there too. So that seems like, again, a cluster of resistance. This one's underperforming so far, but we could obviously see a little bit more volatility in some of these beat down stocks, sectors, etc. So IWM, Russell, same exact situation. We have descending resistance. We have 200 exponential, 200 simple. We have the 821 bull cross. And then we have, some fib levels around here as well. So getting above the 236 was crucial. If we push up here, the next target seems like it would be the 382 at about 190. The relative velocity, speed, whatever you want to call, of this push to the upside on some of these things makes me think that they're probably not sustainable for just like continuation at this level. But that doesn't mean that we can't just break out, consolidate, cool back down the indicators, and then go higher, which if we look back at the Dow Jones is essentially what we did. We push up here, got above the level, printed bearish divergence the whole way up here, break down, found support, we buy back in at support as we're confirming into a bull market, and then we get a push up here. And now this push up here is going to determine what's happening. Now we've already used a lot of energy from our, push down here, but the most important thing is, this was the bearish control zone into the bullish control zone, and we had a massive move to the upside. And then this was from the bullish control zone back down to, the bearish control zone here. We barely touched the 20 mark right here. So we have a massive move up in that distance, then a tiny little move back down. So if we are recharging, we could potentially get another one of those big moves up. But what you don't want to see is this much energy get used this soon. Now, the key is going to be when we push up here, can we get back inside the bullish control zone? Can we take out that previous high without a rejection of the slope line and printing bearish divergence? If those things happen, there's no doubt in my mind we're going to new all-time highs. So XLE, again, people are just absolutely dumbfounded how this is still performing so well. Keep in mind that, there's a big separation between a company and an actual commodity. So oil prices could go all the way back down to 60 and these things can still be profitable. So when they're consolidating in the 70s or 80s and people are like, bro, the oil price is down 40%. So should XLE. It's going from 94 down to 60. Okay. It's kind of like the whole commodity to business that's involved in that commodity is sort of like the whole stock market compared to, the actual economy. When people are like, the stock market has to go down because the economy's not good and it's science. Well, does it? Sure, that makes sense. If you're just on a basic level, you're like, okay, because the economy is really, the state of the businesses that make up the country. So makes sense, kind of. But is that what we see? Is that what actually happens? No, not at all. So just don't get stuck listening to these stupid ass people that say whatever the economy is doing, the market has to do, or whatever the market's doing, the economy has to do. Because we know for a fact it's not true. We know for a fact it's not true. So DXY obviously under some pressure, broke down below the 200s, back tested, rejected, new low. You guys know we have a target slightly lower here. We're looking for this pushback down to around 101 initially, and then just under 100. That's going to be a key level. If we don't find support around there, it's going to look real nasty. Currently, we are printing consistent bullish divergence. Will we continue to do that? Will we invalidate it? We don't know yet. But honestly, whatever happens right here with this cross back down, we're going to print another drive of bullish divergence. Just a matter of time before this explodes back up. The same way we're talking about oil. The key is before that happens to make sure that we have at least hedged ourselves or locked in some gains, because this has been a slow, steady kind of grind down. So when you have a slow, steady grind down and then you pop off, it's usually like quick and violent. The same way as when you have a slow, steady grind up and then you sell off, it's usually like kind of quick and violent. So that's what we're looking for. Obviously, as long as the DXY is weak, that is huge. And we talked about this a ton going into the year too. And this was part of the reason that I have been arguing that we would see a early year rally and so much strength in these markets is the markets were down a lot over the last year plus, depending on what you're talking about. If it's Cathie Wood, you've been suffering for almost 2 years. But the markets have been down for a year. The dollar has been very strong, and now the dollar is weakening. So if you're a foreign investor that's interested in investing in the United States, all of a sudden your currency is strengthening compared to the US dollar as the markets are down. So you basically get a double whammy. It's a bonus. It's two positives going on at the same time. So that can bring a lot of money back into US markets or off the sidelines, etc. All right, so Tesla is next. So you guys know, obviously, we have that long Tesla trade in full effect. Unfortunately, this one just kind of stalled out, and it did so at the breakdown of support, which is now acting as resistance. This is a crucial level right here. We're still above the 8 for now. We're at resistance. If we break through this, we're going to retest the 21 and then probably the heart line. And then honestly, at that point in time, we're probably going to retest the top of the range or the breakdown of the macro channel. And by then, our trade setup will have played out. Obviously, still in the Tesla trade, we took the trade right here. We had that gap down. It looked bad, but we were expecting it because actually our target was $99. So we were already positioned for that. So that was beautiful because that probably stopped out a lot of people when we put in a new low. So if you put your, buy in here, and then you said, if we take out that low, I want to be out of this trade, you get stopped out, and then we immediately push up here. So that is why it's important where you actually enter at. Tesla looks good for now, building momentum, kind of stalled out here at resistance. Definitely, lost some of the favor of the Tesla cult, but overall, it's still looking like a nice trade with lots of potential. So the Microsoft trade, we talked about essentially taking that exact same trade again. I did not take it, but if you did, again, nice bounce right here, back up, already cleared the 8, back testing the 21, trying to close that gap from the fall down here. Again, looking nice and likely to get to the 382. Hard buy signal, multiple green histograms. How much follow through is this thing going to get? It's still in that same scenario below all that resistance, but it's building up some momentum. So we are still short on Apple for now. We're going to go ahead and get out of that position if we do get back up here in the 130s or 140s. Obviously, we're short from up here at 170, so we're in a nice position. But this is essentially our counter trade. We're basically long on everything else. So we're sticking with our short on Apple. So we're kind of hedged. Hard buy coming in, a bunch of green histograms. We could have went ahead and actually closed this one already. I don't think it's crazy to think we close this one, right off the bat in the next couple of days, up in resistance here and just lock in the gains that we do have and then just go from there. Google having a nice bounce off of support. So we laid out that Google trade setup. And as you can see, all of the trade setups have been absolutely slaying. So if you have any balls at all, or, you've been following the channel for any amount of time, you're probably sitting pretty right now. But keep in mind, obviously, any of the trade setups we talk about, trade setups for me, things I'm looking at or potentially taking myself, but none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So we're still in that little sideways channel. We're almost at the heart line here. The target is obviously the 382. If we get through the 382, we're going to have a W double bottom. And then at that point in time, we see this second trade setup playing out. So we're on our way to that first 14%. Seems like we're on our way really to the 25%. So the meta trade has played out really nicely off of the lows right here. Beautiful move back up and close the gap. And now we're seeing that continuation as well. In my opinion, after that initial move, it was basically just a coin toss. What was going to happen? Everything's doing pretty well right now. So it seems more likely than not that we're headed up here to the top. So if you would have taken the short, obviously, could have got stopped out of that. If you would have taken the long, obviously, you would be making up for the loss you had. So that's how we were talking about. You don't have to be right about the direction when you're at a key SR point, like SR flip or something like that, because you can essentially use that as your pivot and then be wrong. The one you're wrong on, aka in this case, the short, gets stopped out right away with minimal losses, and then you're in a profitable position shortly after. Now, how can this go wrong on you? Taking a non-directional trade or like using options, it go wrong on you by moving up here, hitting your stop loss, and then moving back down here and hitting your other stop loss. So you get stopped out of both trades at a loss. That is not cool. So you got to be careful for that. Same with like short, time options or too tight of a range options. So Amazon, okay, so this is one of the ones that we did take. So Amazon, we're looking for that 20% move. We're already better part of the way there. So, this has been honestly, we got perfect entries on this stuff, but you don't have to be a genius or anything like that to grab a couple 15, 20% moves in a couple of days. Obviously, you don't want to be going in too heavy. We're still using position sizing. We're still, keeping in mind the fact that we are in fact in a bear market. Not crazy to me though, to think that we not only fulfill this trade setup right here, take some profits along the way, but then actually we get another surge up here to close that gap, because that is still open at the 618, which is going to be the 200 exponential and simple. So, obviously this was looking like a shot in the dark when we put it up here, and most of these trade setups seemed like I was delusional. But in hindsight, now you can see that the system actually is fucking amazing. And that's all I do. Granted, I was the architect of the system, using a lot of much wiser, much older, much more, famous people's work. But that's really just what books are all about. Read a book, design your own system, write some indicators or a trading plan or whatever, and then just follow it. And that's all we do. The beauty is I actually share my trading plan with you guys, unlike people that are always trying to sell theirs or keep it for themselves. I really would rather other people learn how to do this, build their own trading plan, and be successful on their own. So that being said, this could easily amount to, from what was a 20% move up to a 32% move, another 12% on that. So I don't think it's crazy to think, hey, we'll probably trail the stop up here, maybe lock in some games on the initial push. But I think it's time to start looking at that 618 as a second target. All right, so that is the magma. I'll take a quick look over here, and then we're going to keep today's stream relatively short, 38 minutes, making nice progress. What's up, Eli? Good to see you. Push, push, squeeze, squeeze. I know that's right, man. It's like one of those old Flintstone push pops. Ice cream truck in the house. Oh, wait. You guys might not be from the hood. Do they have ice cream trucks like where other people live? Gold. Gold's still looking okay. Here's the thing. It's going to be tough for gold to have a sustained rally if we're going to see everything else continue rallying, because gold is the safety play. Gold is not, people are not speculating in this, trying to get rich, whatever. They're trying to protect their purchasing power. So if we see a continued move to the upside, people are going to stop buying gold, because they're buying gold because they're afraid of what's going to happen. Now, granted, there's still some currency, situations going on here, etc. We're very close to confirming into the bull market. Not crazy to think that what's actually about to happen is gold's going to top out somewhere around this range, push back down here to about 1780, find support, and then we could see continual strength to the upside. If we do see, okay, here's another big one we need to talk about. If we do see continued weakness in the dollar, that's going to alleviate the pressure in commodities, because commodities are priced in US dollars. So if you're the Federal Reserve, obviously the people that are in charge of everything, the most important man in the world is obviously Jerome Powell. So if you're this guy, the most important man in the entire world, okay, and you're trying to crush inflation, all right, And that's obviously your number one priority right now because we're at like record low unemployment levels ever. We're like in the threes, which is insane. So that being said, if you know that weakness in the dollar is going to cause strength in commodities, which is a fact because they're priced in dollars. So it's an inverse relationship. So you don't have to be a scientist to figure that out. You don't have to be a lawyer. You don't have to be an economist. Okay. I mean, just a basic child can figure out the inverse relationship between if something is priced in dollars, and that commodity. So that being said, if commodities surge because the dollar is weak, where did a lot of the inflation pressures come from? Commodities and energy. You remember when wood got expensive, when coal got expensive, when natural gas got expensive, when wheat and oil and soybeans and all these things got expensive, and then they caused inflation? I find it hard to believe that the Federal Reserve doesn't understand that. I find that very, very hard to believe. Now, is the Federal Reserve smart? Do they always make good decisions? No, fucking morons. And I hate them. I hate the Federal Reserve. Hate central bankers, okay? I hated them back when me and my man Big J used to kick it. Jesus, okay? I remember one day he flipped out, grabbed the money changers table, threw it up in the air, started screaming. I mean, that was the first time I personally was exposed to like central banking, okay? That's a made up story, obviously. Not by me, though. Someone else made that up. Could be true. I don't know. So anyway, when Jesus threw over the money changers table, it was obvious that central banking, probably not the best idea. But that being said, they've had, a couple thousand years since then to just get better at it. So I just find it very hard to believe that they don't understand like the underlying dynamics. So if they really want to stop inflation, they really don't want to get like the Paul Volcker, massive burst up thing that lasts for years and years and, goes crazy. If that's true, it seems much more likely that the dollar can't actually continue on this path down and gold can't actually continue on its path up and commodities can't go back into, a massive bull market cycle until we shake out some of the current inflation. That's a pretty good narrative. Now, does it have to happen? I mean, no, because fundamentals are trash. I mean, it's obviously all about the technicals. So silver, pretty strong move up here. Again, very similar to a situation going on with gold. It is at that resistance. Obviously when we're down here at like $18, we were looking for that move up to 25. So we got it. It was a nice move. Very well done. Breakout from the descending channel, measure move to the upside, recapture the 200 exponential and simple, back test the heart line of the channel and the descending resistance, going back to the all-time high. You guys know macro. I talk a lot of trash about silver, but I am macro bullish on silver. In a way that I'm not necessarily on gold. I think gold will appreciate over time, but silver, you could potentially speculate, invest, make some money on if you look at things like gold silver ratio, everything like that. But the truth is, for now, I think this is looking really, really toppy. Now, I could easily be wrong. It's not crazy to think we get up here to that 25 target, go slightly higher, and then, maybe we come back down to like 21, 22, consolidate, and then we can kind of see what happens from there. It's very obvious when we look at these charts and the violence of some of these moves to the upside that this is not going to be sustainable without some kind of consolidation. Does not mean they're going to end anytime soon. Doesn't mean we're not going to capitalize on more gains along the way. But we should also be realistic that, hey, this isn't necessarily just going to be like a reversal of all trends. So GSG came back down here, double bottom for now, back testing, trying to cross the 821 back up. Seems likely it would come back to 21 or 22. Obviously, this is going to do whatever energy, commodities, whatever do. We'll see it reflected in some of these. So LNG, nice little move. Cheniere Energy, back test of the 200s, as we discussed. So we'll see what happens here. Does this act as resistance? Do we get some continuation back up here slightly higher? Okay, so we have hypothetically talked about the bottom quite a few times. I think it's safe to say at this point in time, we gap down, we hit the zero. We immediately, in one candle, touch the 236, consolidate below it, shoot up through the resistance in white right here, and then touch a 382. So this thing is trading extremely technically. So the real question is, after hitting the 382, are we going to pull back down to the 236? For me, that's a buying opportunity. I think we're going to come back down to 236. We're probably going to the 0.5 or 618. Just the problem with this thing is like, I don't want to be like spoiled, but I mean, what are we looking at? Like 8 to 12%. So like use this as an indicator, but are we like trading it? No. All right, so Mosaic. So again, that whole inflation stuff we were just talking about, and commodities and food and all that trash, just like ditto. So we came down here, put in a new low. We're consolidating below the 200s. We're clearly in a bear market. We ran into that yellow resistance and banged our head and immediately got rejected. This does not look nearly as good as most of these other charts, but also a buy, sell, buy signal is essentially just, imagine for instance that instead of this being buy, sell, buy, it was just buy, sell, buy. That's the bullish divergence signal. So do we see continuation here? It seems likely. It's just the double signal basically. And what is the double signal really? It's like at that cross, you're basically just trying to decide on the direction or having a fake out or a failed breakout or breakdown, etc. So CCJ had a nice move up here. Definitely want to watch this as we bounce back up to that resistance. So we had this orange resistance on longer time frames here, and the push up took us exactly to that. We did get back above the 200 exponential and the 200 simple, so that is good. We're building up momentum. I like that. The problem is, once again, is the velocity of this move and the amount of energy that we use for this little move. We have to consolidate around here so that we can actually see continuation. And to tell you the truth, this chart still looks exactly the same to me. We're basically just like in a triangle. We have, a high, then a lower high, and then we have a series of higher lows. So we're basically just like squeezing in this until we get a break either down or above like 29, 30 bucks. It doesn't really mean anything to me. We're basically just selling the top and buying the bottom of the range. So Tilray had a nice move up here. So it broke down, took out the lows, not quite the macro low, like literally pennies off of it. Push up here into earnings. The earnings came in pretty bad, honestly, like really bad. Not as bad as some of the other players in the space, but the surprise was like off by 100%. So they were expecting to lose 11 cents. No, I'm sorry, expecting to lose 5.7 cents and lost 11 cents per share. So, twice as bad as they expected. Tilray is still not in like terrible shape, like balance sheet wise or anything. And then as far as revenue, they missed revenue by 10 million, which is about 6.8%. So again, I mean, it's bad, but it's not like terrible. I think people were kind of expecting, like, let's be real, missed earnings here, missed earnings here, missed earnings here. So no surprise, this thing's getting like completely beat down and pot stocks are ugly and hated. So it's not crazy to think this thing's ready for a move up. We're leaving the bearish control zone, hard buy signal, bunch of green histograms, momentum building to the upside. Still very much bearish, still very much in a bear market, bear trend, bear everything. But not crazy to think we get another pushback up to like $3.50, $4 from here. I could see it like 25 to 33% move up here. 15 to 30, even 50%. We'll see. I really want to see the 821 cross back to the upside. I'm not sure if we're going to get an opportunity from and when and if that happens, because by then it's probably going to be up here at like 350. But to tell you the truth, I mean, I'm not here. Here's the thing. Okay. Like, sure. In hindsight, I, wish I would have bought right there and already captured 15%. Sure. If we get up here, it's going to be like, oh man, we could have been in for 35%. Now we're only in for 10. Sure. If we get up here, 69% to the upside. But even if we miss this 69% to the upside and we get back on top of the 200 exponential and simple, even if it's already up 69%, but then suddenly we're in a bull market for like the first time. I mean, that's like missing out on this push up here. And then just, you're like, oh man, that was terrible. I missed out on this 138% to the upside. So now I'm just not going to buy it anymore. I just don't like it. I don't want it. I don't want anything to do with it. And then you miss out on, the 539% after that. So am I worried about missing out on like this 70% right here to actually make sure to confirm to have a better probability of success taking a long trade? No, because when we really, really zoom out and look at it, what is the difference between this little percent right here? Sure, it's going to look better on paper if we go back to all-time highs or something like that. But I mean, the truth is, this little itty bitty percent right here is nothing in the grand scheme of things. If you say, let's say like 2 years from now, 3 years from now, this thing's back at all-time highs, or it's even like at $50. Okay. The difference between buying at $3 if it goes to 50 and buying at $4.30 if it goes to 50. On paper, it's going to look good. And you're like, oh man, I killed it. I bought the absolute bottom, whatever. But I mean, who cares? Like, honestly, who cares? Like, I've never 10x my money and been like, oh man, should have been 20x. What was I thinking? I don't think so. I mean, and if that's the way you think, you got to rewire your brain. So UNH, so we saw that big breakdown. That was a big deal. Lost at 200 exponential and simple. It came down perfectly to 618. Seems likely this thing's going to get a back test to 382 and retest at 200 exponential and simple. We'll see. This has been really strong, and then it was weak. Some of the other weak stuff has been strong as of late. This is obviously the #1 stock in the Dow Jones. So very, very important for the direction of the market. HD is next. Home Depot. So we're back at that potential entry spot. So if you're interested in Home Depot, we're talking about a 16 to, arguably like 21% move up here with a roughly like 8% stop loss. And we're confirming into a bull market. So no matter what you want to talk about it or whatever, and people are, oh, how do I know when to buy this? How do I know? Just trust the system, okay? Here, we trusted to get the hell out, and it works. And then, somewhere around in here or where we're at right now, we trust to get back in. And, most time it works. So I think we should probably just do that more. So if we clear through this level, it's going to look like a W, double bottom, and then that's when we get the breakout measure move to the upside, which is the green arrow here, taking us potentially back to like 375, 400. So GS Goldman Sachs attack. So we rounded out basically at the 200 exponential. We talked about potentially slightly lower to 200 simple or the 0.5. But as soon as this hold and started rounding back over 821 bull cross again, seems very likely we're headed back up here for, I have it drawn as the 5-way structure, but obviously it's invalidated because we came too low on the retracement. But still, it's the same principle. We essentially move up, higher low, move up to a new high, higher low, move up to a new high, potentially threaten the all-time highs, and then blue sky breakout. Caterpillar. So everybody's calling for like double top on Caterpillar right now. I think it's worth paying attention to. There's a possibility like this move in Caterpillar is not like something you see in like massive like billion-dollar companies. 53% move in a matter of a few weeks, but it is what it is. It had all the opportunity in the world to break down here, fill the gap, and potentially backtest that, and instead it moved to the upside. At some point in time, it'll have to build some kind of support, but this could be a breakaway gap. I'm not a big fan of breakaway gaps, but they are a thing. They are a thing. We'll see on this one. This is probably going to print some bearish divergence. Best thing it can do is just go sideways for a while, honestly. So MDO, McDonald's hanging out at the 200s, seeing no bullishness from what's going on here in the markets. Hard buys coming out of the bearish control zone, bunch of green histograms on the support. This should bounce from here, honestly. Every time it's touched the 200, it's been a good buying opportunity. So it really should. I don't think McDonald's probably going anywhere. Unless they can like finally prove that the burgers are made of human meat or like rats or something like that. Which, I don't have any like privy information to it or anything like that. But also, if I read that article tomorrow and it was true, I wouldn't be surprised either. But obviously, I'm not accusing McDonald's of grinding up rats or people, obviously. But, let's not say it's impossible either. Come on. Come on. So Amgen, got that nice bounce. We talked about the entry. We talked about the actual trade setup and position right here. So, it's 27% up to the 1.5. Could go a little higher, the 1.618. The 821 bull cross has taken place now. All green histograms, hard buy signal. So we'll see what happens. Again, is it possible these things roll over and put in lower highs and reject and go down? Sure. But at this point in time, most of these trade setups have moved enough in our favor that we can just pull our stop loss to our break even. And then if we come all the way back down, we just get stopped out, and that's okay. So we're just not going to let what is so far a small winner turn into a small loser. So there's basically two options that could happen, or a big loser. This could basically continue to the upside and we get a big winner. It gets rejected, goes back down, we break even. Or gets rejected, goes back down, and we don't get out of the trade, but we don't move our stop loss up, and then it turns into a loss. And obviously that's not a possibility because we won't let it be one. We're in full control of these markets as much as you can be. We're in full control of our own portfolio. That's it. That's the one. So Microsoft we already looked at. Visa, so broke through that key resistance. And again, this thing looks like it's basically going back to highs. I mean, there's nowhere else to go. Sure, maybe it hangs out at 233 for a bit. But I mean, realistically, at that point in time, it's like, it's just going to go to the new all-time highs. I mean, it's what? If we move up another 5%, it's there. And that puts us 13% off the all-time highs. I mean, come on. So we did finally get our push down into the squiggly. You guys know what that means. Since then, we got a nice bounce. Some clear, like, little resistance right here. So if we can get even one more day pushing up here, that should be all we need to really get that move. And again, we were looking for the measure move of the W double bottom. Little breakout from the lows to the resistance. Obviously, we got the initial breakout and then the back test, which is good. That's what markets should do. They shouldn't just break out and then just go straight up. They should always back test because there should be buyers and sellers fighting to see, hey, are we going higher or lower from here? But the measure move from there is new all-time highs. So expect that. CRV, Traveler Company, just hanging out at this level. Again, this thing has built quite a bit of bearish divergence and is like at highs, just hanging around. The best thing this thing can do is just stay. But we are still looking for this potential like roll over type scenario here. We got a little stumble and then a push up here again. When the histogram gets in line with the actual slope is when we'll see if there's like a hard rejection. But I mean, honestly, this thing's rolling back over, cooling back down, and we're just hanging out at the highs. That's good. So Deer. So this is another one everybody's calling for, like that, double, triple top, whatever on Deer. We came down, filled the gap, hit our entry perfectly, and then we've moved back to the upside. Is it possible to go down from here? Sure. Is there quite a bit of resistance right here from the previous time we bumped our head on it? Sure. But let's not pretend like the more times we hit this resistance, the more likely we are to break through it. And, with blue sky breakout on the horizon, not crazy to think we're going to come up here to the 1.5, 1.618, which we're talking about like, 561 to 595. We're talking about like 30 and 40% gains on this thing. And this is not some trash crypto or like Bed Bath and Beyond. This is John motherfucking Deere. The hat company, right? That's what they sell. Those hats with the tractor on them. And that's their only product. Hats with tractors. Oh, wait, no. Is it a tractor on it? It's actually a deer, isn't it? I can't remember. But it's hats. Strictly hats. So if you think people are going to stop wearing hats, short John Deere, okay? But if hats are still in, they're still cool in the future, John Deere is going to do well. All right, so moving on from the hat market, now we're going to take a look at sweatpants. Lululemon. So this thing obviously had that disgusting, the actual earnings were like not that bad. I mean, they weren't amazing. It was like basically just break even, 2.5% up on revenue, 1.5% up on earnings. But we saw that breakdown from there. And then actually this was the initial gap down and then another gap down based on their guidance. And then from that, they basically came down and it held support. This was our line in the sand, where we don't want to be in the straight setup anymore, is if we start closing below that level. And instead we came down to it and found support. So in my opinion, if you didn't enter the Lululemon trade, or I didn't enter the Lululemon trade and I wanted to, it looks better than ever now. Now, granted, it would be nice to get back above the 200 exponential and simple, but it still looks pretty good. I mean, we look like we're going to threaten the resistance / support of the descending channel. We look like we're going to threaten the support of the ascending channel. And then, we reclaim both of them. So, this was our box. This blue box right here was a thing. We touched it the first time. We scared the hell out of people the second time. But the truth is, I mean, this is the entry for the trade setup, basically. And that's 30% upside to the 786. Even more if you just entered now. If you were late to the party and you're like, oh, I should have entered the Lululemon trade. Oh, it's not too late, 35%. And then realistically, just back to new all-time highs, 49%. Yeah, I mean, we'll see. And, if you were the guy who was like, oh, Lululemon's trash, I'm going to trade the other side of the trade because we did put in the hypothetical. Yeah, I mean, you could have captured, half of that trade in like a candle or two, like 9 or 10%. Obviously, I did not, but it's nice to throw out some hypotheticals there sometimes. And that's the opposite of the worst case scenario. Best case scenario is you take the long and the short, and then take profits on the short, and then enter into the long. So you get the direction and the timing right. That's when we start calling you market daddy. All right, so we did it. Made it through all of the assets. So we'll see what happens here with crypto. If we can get that consolidation and continuation. I mean, this was a new close high above that previous little level right there. So it seems pretty realistic that we're coming up here to tag some resistance. And obviously, nobody gives a shit about Bitcoin. It is complete trash. All they care about is, their altcoins, which makes sense because when the market's bullish, people would rather the volatile stuff. When the market's bearish, they want out of that volatile stuff. And right now, we're in a bear market, but the short-term trend is bullish. Now we'll see what happens with inflation. But honestly, I mean, I think inflation is going to continue coming down. We're looking at crazy. Here's the thing. This is the in my opinion, the hardest or the least conclusive data that can come in tomorrow is if we get year-over-year inflation down, which it should be for sure, because we're coming off of insane numbers from last year. So year-over-year inflation should be down regardless. But the month-over-month is what we're going to have to pay attention to. Because if we count on the year-over-year being down, which is obvious, but then the month-over-month is up or not down as much, like it's showing like a deceleration of downward pressure or however you want to look at it, that's not good. I don't know how the market would take that. I don't know what kind of situation we'll see. But again, it's all about, the difference between reality versus expectations. Right now, the market is expecting year-over-year numbers to be down and month-over-month numbers to be down. It's expecting core and CPI to be down. So all those things should be down. So if that's the market's expectations, if any of those things doesn't come in line with what the market expects, we could definitely see, a pop in the dollar, a pop in TNX, bonds coming down, risk on assets coming down. But after that, I'm not convinced that they have to go lower. I think it's just basically getting back into a line with the unrealistically bullish expectations back to just actually things aren't that bad. So right now, if you're betting on the markets, you're betting on the soft landing. So that's it. Gonna go ahead and wrap it up there. Jay Hoff said, killing it as always, man. Yeah, congratulations to anybody that took literally any of the trade setups we have talked about on stream. I mean, I think we laid out in the last week, roughly 20 trade setups. And I think, 18 or 19 of them are up right now. And the majority of them are up double digits. So congratulations to each and every one of you that takes the time, puts in the work, and looks for key opportunities, actually learning how to trade, getting better, sharpening your belt, all that stuff. Congratulations to all you guys. Because the truth is, most people are not paying attention for weeks and months at a time. And then suddenly they're just jumping in after the move has already taken place. We were able to basically position ourselves at, what amounted to the bottom and essentially put ourselves in some really nice positions. So, and who knows, if we do see these markets reverse and continue into an uptrend back into bull markets, and then we do continue going up from here, sure, we're going to take some profits along the way, but we'll continue to just buy into strength as we get above those resistances. And then we're going to look like absolute market gods because we'll have bought essentially the macro bottoms on everything. So, it's not really about that. I don't brag about my trades or anything like that. I think it's super arrogant. But the truth is, it always feels nice to enter into trades at the right spot and exit trades at the right spot. So keep up the hard work, everybody. Keep staying focused out there. Obviously don't get greedy. We need to be locking in positions. We need to be fiscally responsible. But we'll see what happens with inflation tomorrow. And then going into the end of January, February, there's going to be some crazy volatility, obviously, depending on what the Fed does. But after February, I'm really hoping that we're going to see a much more I shouldn't say after February. after the first couple days of February, I think the meeting's on like the 2nd or something like that. Within the first week of February, we should have a much better idea as to what's happening. We'll see a bunch of earnings in the next few weeks. We'll know what the rate is, all that good stuff. The one thing that I think we need to really focus on that no one is talking about is as we sort of see this shift into the quote unquote pivot, or whatever you want to call it, the pause, or the stall, or whatever you want to call it. As we see that kind of shift taking place, whether we see 25 or 50, or whether they take, a break in between meetings, and we see like no hike for 1 or 2 or whatever, the most important thing to focus about, and no one is watching, is the balance sheet. We've been talking about the balance sheet and how that's been in the back burners, but the truth is the balance sheet is arguably just as important, if not more important. So if we suddenly see the Fed pause in the next meeting or next couple meetings or whatever, and there's no more rate hikes for the foreseeable future, and then they're just going to keep rates high for longer, quote unquote, that's them. That's when it really becomes important that they're sucking all this liquidity out of the system, because that's essentially what they're doing. Before, they were net buyers of treasuries and mortgage-backed securities. And now they're not necessarily net sellers, because they're not really selling this stuff off their balance sheet. They're more letting it mature and then not buying. And we've talked about this scenario quite a few times. What is the difference between if you have a bathtub and it's empty and you plug the drain? If you turn on the water with the drain plugged, the water's slowly going to fill up because there's nowhere for the water to go. So, that's like a net buyer. That's what the Fed has been doing for the last couple of years. They've been just filling up the bathtub with treasuries and mortgage-backed securities. So right now, essentially what's happening is they cracked the drain. So they're letting some of this drain out. And even though they're still buyers, they're not net buyers anymore. So they're still replacing some of the runoff as it occurs. Some of these things are maturing. They're like 3 months, 6 months, 9 months, all different durations. As they mature, they're replacing certain amounts of them to be in accordance with the balance sheet runoff or the reduction of the size of the balance sheet. So sometimes they're going to buy, sometimes they're not going to buy anything, sometimes they're going to sell. Most of the time, they're just letting stuff mature, and then they're buying back a portion of that to get the balance sheet where they want it to be. So right now, the Fed has the drain unplugged. The water is still on, but there's more water coming out than is going in. And that's what's important, because that water, all that buildup, that's the liquidity. So as the Fed continues, to basically push that liquidity back off of their balance sheet into the markets, that essentially it's sucking up, the buying pressure that would be there is now becoming essentially selling pressure or no pressure. So it's sort of like the light switch scenario where we can have a light on, we can have a light off, but we also have that little like dimmer knob that like fancy lights have. That's kind of what's going on right now. We have the dimmer knob. So very important to pay attention to that and keep focused on that. We'll bring it up in the next stream and talk a little bit about that and what that's going to look like. But very, very important that if we see rates higher for longer and the Fed continue to have this balance sheet runoff, that's going to put more pressure on the markets than people are honestly crediting. I think everyone's focused on one thing right now, and that makes the other thing exponentially more important because it's the unseen risk, but it's sitting there right in plain sight. All right, so that's it. We're going to wrap it up. Appreciate you, Eli, stopping by today. J Hoff in the house. Mark, good to see you, Mark. Appreciate you. Thank you for the compliments. Eli says, crushed it. Last stream, Amgen, Honeywell, TRV, Visa, Home Depot, and obviously the crypto trash. I know, dude, we absolutely have slayed. We have absolutely slayed. We talked about getting off to a good start for January and of the year. And honestly, if this isn't it, I don't know what is. Unfortunately, we haven't quite been able to identify the next like serious big trend. So that's what we're going to be focused on, is figuring out, where the next real bull market is, not just like some little bullish pop off squeezes. Mark says, what's the difference between Joule and Joule Thief on TradingView? It's just like 2 different versions of the Joule I published. And then the group members have access to the one that I use on stream as well, which has like the hard buys and sells. I think the original Jewel maybe that I published has an error in the script. So if you like change values, it doesn't move. I can't remember. It's been so long. The thief eventually takes your money. No, it's the other way around, man. We're the jewel thief. That's the thing. The jewel is what allows us to thieve the money from everyone else. Yeah, oh, okay, yeah. I can't remember. I would have to look. I've published or like created so many different versions of these things. But yeah, if you're not using the knife, definitely use the knife. The knife is phenomenal. Yeah, definitely use the knife, man. All right, so that's it. Appreciate everybody tuning in today. Everybody have a great night. We'll see you. I haven't been doing the Friday streams lately, just because it's been taking up a lot of time and there hasn't been a lot of action. So I'm not sure if we're going to do a Friday this week, but I am going to keep putting out those individual videos as well. Strategy paying off. I know that's right, Ralph. Strategy is definitely paying off. So, all right, man. Well, congratulations to everybody making those fat gains. Hopefully these trade setups continue to just absolutely wreck the markets and dominate the space. I'm going to go ahead and wrap it up there. You guys know, obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And of course, as always, if you do take any of this as trading or buying or speculating advice, you will end up living in a van down by the river. That is an actual fact. It's not even speculation. And yeah, that's it. So that's a wrap for our Wednesday evening midweek market update. It is 9:15 p.m. Eastern Standard Time on January 11th, 2023. I am the one and only crypto trend trader, and I'm getting the fuck out of here. Everybody have a great night, and we'll see you on the next one. Peace out.